Hi everybody, Nicholas Magone here, Vice President of Campania Wealth Management, a branch office of TFS Securities. In this video, I'd like to address the importance of life insurance and a few planning concepts that can put your family and business in a much better position. We all know the basic premise of life insurance is to provide a lump sum of money to your family in the event of an unforeseen catastrophic event. But there are so many additional reasons to consider a policy, which should motivate you to rethink the purpose and amount of coverage as it relates to your personal plan. Some planning concepts that come to mind: business succession planning, estate and legacy planning, and tax-efficient retirement income. Let's explore each in a bit more detail. Business succession planning is a vital planning concept if you are a partner in a business and have multiple partners or just one partner. Without formulating a plan, your family could become disinherited or not realize the full value of your share in the business. In the event a partner passes, the succession plan would detail how the business is valued, how the heirs will be paid out for their share, and how the funds will be received. Without a plan, there's really no guarantee that the remaining partners can provide a market for the business. And absent life insurance, ask yourself, how will the partners obtain the funds necessary to pay the family? Will the value be agreeable, or will it lead to litigation? This is why life insurance is commonly used to create liquidity for the business and partners to buy out the deceased partner's shares. Some considerations when designing a plan is how to structure policy ownership, policy type, and amount of death benefit, which is typically based on each partner's share in the business. These are all areas in which our team can assist. Overall, a business succession plan allows for a streamlined solution protecting everyone's interests during what will be a very difficult transition period for both the family and business. Regarding estate planning, it's no question that our government has a deficit, and instead of cutting spending, they're likely to raise taxes in a number of ways. One of the most debated areas is the estate tax, which is likely to revert to pre-2016 exemptions, in which limits per individual will likely fall to 6.2 million from the current 12,060,000 exemption. The estate tax rate is likely to increase as well. Not only this, but there are ongoing discussions about changing the rules surrounding step-up in basis upon death, limitations on grantor trusts, generation skipping trusts and taxes, and those are just to name a few. Don't forget, all this will likely coincide with changes to estate taxes at the state level, all designed to disinherit your family. So ask yourself, will you have a future estate tax liability that will reduce what your heirs will retain? And will your estate have the liquidity required to pay any taxes due? Oftentimes we see large estates tied up in illiquid assets such as real estate or businesses, making distributing funds and paying taxes very difficult. All of this can be addressed with an insurance policy specifically designed to provide estate protection. Additionally, life insurance is often used as a funding mechanism to leave money to a desired charity or foundation. As we can see, there are many reasons to turn to life insurance as an estate planning tool, but just like how estate taxes are likely to increase, so too will personal income taxes, which will have an impact on your future retirement income. This leads us into utilizing life insurance for cash accumulation as a source of tax-advantaged retirement income to complement other sources of income, savings, and investments. There are many ways in which a policy can be designed and many policy options to choose from. So it's best to work with our team to determine if this is a suitable strategy and explore policy options. Additionally, for those who meet certain qualifications, there are ways to structure policies by converting older, underperforming cash value policies into a financed policy that could really turbocharge cash accumulation, retirement income, and death benefits. This strategy is how billionaires often protect their interests, but we have the means to bring this concept to clients at a more mainstream level and is worth exploring if you currently own a cash value policy, have a net worth over $3 million, and earn over $300,000 a year in income. So to summarize, if you're a partner in a business, then we should be discussing succession planning. If you're concerned about future estate taxes or want to leave a certain amount of inheritance to your heirs or a charitable cause, then we should discuss how to incorporate life insurance into your estate plan. And lastly, if you're looking for tax advantage income to diversify away some tax and investment risk, then we should look into designing a cash accumulation policy to complement other sources of retirement income. As always, feel free to share this video with friends and family. Thank you, and we look forward to speaking with you soon.